Hello again, everyone. This is Joe Henches with Beyond the Chart, and this is the Stock Market Analysis Weekend Edition. Today is Saturday, June 28, 2014. We're going to take a look at the markets as we usually do, look at some daily and weekly charts on the indices, and look at some of the indicators, and then take a look at 5 stocks: Facebook, FEYE, First Solar, Green Mountain Coffee Roasters, which I think is now Keurig Green Mountain, and Gamestop. Okay, let's take a look at the Dow Industrials, which was up 5.7 points. It had been down most of the day and just kind of clawed its way back during the day and ended up down. So you can see kind of a little bit of a doji bar, just like the day before. So again, sell off and rally back. Now we're breaking this trend line. So either that means it's going to continue to go sideways and chop sideways, or it's going to turn down. Usually that's what happens when you break a trend line. We continue to, not see a whole lot here. The RSI is hanging right above 50. We got DI minus above DI plus here. Let's take a look at the Dow on a weekly basis. Weekly basis, we were down for the week, down 95 points on the week. Again, it looks like we're just kind of sideways. So 1, 2, 3, over the last 3 weeks, 16,924. We're down about 70 points over the last 3 weeks, basically sideways. So we still get this little wedge up in here, and we're just hanging right along the top part of that wedge. And yes, I believe, the divergence is slight in here. It's a little bit greater when you look over the longer term, but it's not quite as clear. Now here on DI plus, it's pretty clear. And I'm not sure I trust the demand index on this indice with that volume. Let's take a look at the SPX. Not getting a doji bar, more of a small bullish bar in here, but it's pretty small, pretty tentative. That's the other thing I want to make a note of, and we'll talk about this when the month ends. But I kind of did a little quick check, and you can see this from the end of May in here. The range of the month of June is it's the tightest of the last 3 or 4 months. So, I mean, look how tight this is getting. So it's getting really small. So when you plot this on a monthly basis, which we'll do on Tuesday, and we'll take a look at it, how the month ended, it's going to be really, really tight. So that's going to be interesting. Let's take a look at the SPX on a weekly basis. Again, a little doji bar on the weekly basis, and we're, down 1.91 points for the week. So not seeing a whole lot on the picture here, except you are getting the divergence that you can see. The indicator did not go to a higher DI plus, did not push higher with this push in here. So we're getting divergence. Again, really small ranges that we're getting in here. Let's take a look at the Nasdaq. On a daily basis, the Nasdaq was up again, a little bit stronger, 18.88 points for the day on Friday. And it's continuing to riding above this 10 exponential moving average. And yes, we are getting some divergences. See how this is playing out. And if you look at the RSI on this point, the RSI is 74.17 and the RSI closed here at 74.57, so slightly higher. So you're not really getting a divergence in here. You are getting a divergence over a several week period, like a 3-week period. Same thing in here. It's not showing up here on DI minus though, which is kind of interesting. So you're not getting the double divergence on the directional indicator. We do have the Nasdaq Weekly, and again, slight push higher. You can see the small bars in here. But we're getting divergence. The RSI is not even close to being where it was at this point. Back up in here, and that was getting divergence, which led to this sell-off. So it's going to be interesting. This thing just keeps getting tighter and tighter, it seems like. look at the New York Composite. Looking at this just on a daily chart. Of course, we had these divergences that were in here on a daily, but the market does not break down. I mean, it continues to come back up in here, at least for these couple of days. And it's hugging right along the top line. And the Russell 2000 is the last one we're going to look at. You know, it's bounced back on Friday, 8.79, up 8.79 on Friday. A little bit. I mean, it's not taking out the divergence, you know, yet. And we didn't get a strong sell-off with this divergence that we're seeing. So it's going to be interesting to see, does this still continue to lead us down further. Now, if we take out this high or close above this point, I'm just going to get rid of this head and shoulders thing, because I just got my doubts. If we get above this high in here and close above this, then I think we're doing something different. At least that's my take on it. All right, that's a snapshot of the indices. Let's take a look at the short-term trading index, assuming I can find it. Okay, it's right in the middle here. Closed 1.56 on the day, right here on this bar. The 10-day is the blue line. It is at 1.23, so again, it's in neutral ground. The VIX, I just saw, here we go. The VIX pulled down. It was a down 0.37 for the day. So again, that's going to happen when the market, you know, the market's not selling off. And the market did sell off, but it came back. And so you can see how this just sold off down in here. And the high-low, again, has not pushed to an extreme yet. Where is my high-low? You know, I love it when it's right on it and I'm looking for it someplace else. It just kills me. All right, so we're right in here. The net new high, 212 more new highs than new lows on the day. So that's really interesting with, you know, the Dow up 5.7 points. And we're getting this kind of little action, but yet we had 212 more new highs than new lows on the day. Now, it just shows you that we still have this underlying strength that just keeps holding this thing up, and we'll see if it just kind of exhibits itself in some other way. Let's see. Okay, the next thing I want to look at is the semiconductors. Here we go, semiconductor ETF. Haven't looked at these in a while. This has had this big move we talked about before. It looks like we're getting a pause in over this last week. Really tight, small trading range day here on Friday. But still no close below the 10. No real sign that this is starting to break down by any means. It got very, very strong. Look at the home builders. The home builders ETF. Now this one, I almost thought maybe this was doing a rising wedge, but then when I started to draw it in, it wasn't quite as clear as I thought, and so we'll just hold off on that for now. But when you look at the moving averages, I mean, I got a 233, I got a 55 here, I got a 21, and I got a 10. They're all aligned to the upside. And here we got this nice close with it up 0.17 on the day. And it looks like it's trying to turn, like it's trying to trend and continue to pull back up to the upside. So we'll see. I mean, we're going to need to, I mean, we're on a short-term basis, we're getting new higher highs and higher lows in here. So we get, you know, we had this high right here, and now we had this other high here. We had this low, now we had this low. Now, you know, we need to take out this high to continue this progression. Let's look at the XLF. Now this has broken this trend line from mid-May. So we're talking about maybe what, a 1, 2, 3, 4, 5, 6 week trend line, 5 to 6 week trend line that has broken, which doesn't necessarily mean it's going to start plunging. It just means it could be going sideways. It lost some momentum. So we'll just have to see what develops in here. It could just be a simple chop sideways for a little bit because it has moved above you know, this range in here. It's literally sitting. It's like it's getting support right at the 22.5 range area. So will be interesting to continue to watch that. That's how the XLF looks. All right, we're going to dive right into the 5 stocks. We're going to take a look at Facebook first. Facebook has been trending fairly well, but the thing that has me a little concerned with this is that it's continuing to overlap. Okay, so you get above this high, and then this low overlaps with this peak. You get above, and then it overlaps. And so you've got overlapping waves. We're not getting thrusting, you know, movements, you know, like this kind of thing. And so given that we've had this first move down, let me make sure this is looking right. There we go. Rescale that a little bit. But again, the moving averages are aligned, and it's just riding. It refuses to close down below the 10. If it did it, it's marginal right in here or maybe here. And the moving average is aligned, the trend is aligned. It's just that we're not getting an impulsive thrust up to kind of launch this. It looks to me like it's a kind of a corrective type mode that could then just see if we're getting any divergence. Yes, we are getting some divergence in here. So this has got the possible, so that's the caution, okay, that you're getting divergence in here with this chopping sideways instead of thrusting upwards. This could turn right around, break this trend line, and come back down, and at a minimum look to test this, which would coincide with where the 233-day moving average is. So that's kind of the way, again, no signal for me on Facebook, but that's how it looks to me, looks and feels to me. Let's take a look at FEYE. FEYE is another one that's been pushing. Again, this is this whole scenario. I got in this, back down in here, got out when it approached down here. Probably in 2020 hindsight, should have just got out a half. And I think this reversal bar is what spooked me out of the second half. I think that's what we did and what happened. And in reality, probably should have just hung in, although it is struggling. It's struggling to get through here. And my initial target was this 23.6% retracement because I thought at a minimum, it ought to retrace to that level, which is about 42.5. So we'll see. Not strong divergence showing up, a little bit of divergence showing up in this area, in this movement. But it's right now, again, it's trending back. Now the intermediate trend is down, 55 is down. But the short-term trend is to the upside. So that's the way that's looking. And First Solar. First Solar looks to me like it is in a fifth wave, okay? From down here back, look, 11.43, and this thing all the way went up here in the 75-ish area. It's a heck of a move. And it looks to me like we've had 1, 2, 3, 4. Yeah, this did not overlap. 4 did not overlap 1. We had like an A, B, C here, and then a zigzag down. And then this looks like we're getting like an ending diagonal triangle. And so now it looks to me like we're working this fifth wave, which I'm not expecting to get all the way back up here, but right now the short-term trend is pushing to the high side. So I would just be, if you're in it, just be cautious, be trailing a tight stop, because you never know when this baby's going to turn on you, given that we're, I think, in a fifth wave and in the fifth of this fifth wave. So that's my take on First Solar. And Keurig Green Mountain, this is one also that I think has put in 5 waves to the upside here. And right now I think we had this 1, 2, 3A, and this looks like 1, 2, 3B to me, bringing it back up to the top here. Right now it's not taken out this high yet. Now, if it continues to push and takes out this high of 128.04, then I'm going to sit back and say, okay, well, maybe the correction's over right here. But I don't think it's corrected enough. I mean, that's just my feeling on the move. Because this is a pretty small correction. I would have thought that this corrected more down, down into here, if not deeper. So we'll just have to watch and see. Right now it's staying. We've got the the 10 above the 21, above the 55, above the 233. Again, the moving average is aligned, and we're continuing to ride. We got a little bit of a close below the 10, but no follow through. Okay, right back in here. So right now, the short-term trend and intermediate term trends are to the high side, as well as, you know, the 55 over the 233. So right now, you got to sit back and say, you know, this has got to be a question mark. Is this really, are we still in corrective action? Again, if I take out 128, I'm going to sit there and take that off the table and try to figure out, you know, how is this playing out to the long side? But again, the short-term trend is to the upside right now. So if you're in it, again, you just ride it with a decent trailing stop. Gamestop. Gamestop is another one that I think we had these 5 moves to the high side here. I now think that this is probably the correction, but I'm not convinced that this is an impulsive move launching a new 5 waves up, and because of this type of action in here. This move here, let me show you what I'm talking about. This move here retraced 58% of this entire move. Okay? So that's a pretty good retracement. That's a pretty good correction. And I think that may be enough. And it looks like a nice solid zigzag correction. But what the question mark in my mind is, I'm not seeing a solid 5 waves as a first move. And so I'm really questioning what's going on here. And I'm skeptical as to whether or not we're still doing maybe some kind of complex correction. And that's the one thing about these corrective, once you get into corrective mode, sometimes they'll like do the simple and then they'll continue to correct and get more complex before you get a new wave to the upside. So we'll have to continue to watch this. It looks like in my book, like it's kind of going sideways in here, but it did break. Let me just do this real quick and then we'll stop messing with this. From the up, if you take the point up here, it looks like it got a little bit of a breakout of that trend line. If you take it from the top here of the last 2 rally peaks, let's see if I can get my hands on it. The last two rally peaks, then it's just gone to this. So let me get rid of this one. So if we look at this trend line, it looks like it's pulled right up to it. Now, if it breaks this, then that, you know, that's probably a sign that, okay, maybe it is trying to push to the high side, push up. But you've got the 55 below the 233. Okay, so it's in a little bit of, you know, long-term to intermediate that it's starting to turn down. So it's made its breakdown below the 233. 21's below the 55. Although it's been rising, but it's below the 55. The only one that's positive is the very short-term trend. So that's why you got to be a little bit cautious, because everything right now is, you know, theoretically aligned to the downside. 21 below the 55, below the 233. So that's my caution on this. All right, that's it on the 5 today. Facebook, FireEye, First Solar, Green Mountain Coffee Roasters, and GameStop. Tomorrow we'll be back with looking at our trade ideas from last week, how things are playing out, what I'm currently in. We're actually in 5 positions right now, I think. And then we'll look to see if there's anything more that develops for the coming week. Okay, number 1, I want to mention subscribers. Just a reminder about the video analysis coaching program. I've got a few slots available. Head on over to that page on the website. Check it out, subscribe, get credits, and let's get going. So thanks for watching this stock market analysis video weekend update. If the video helped you in any way, please show the love by clicking on one of the social media buttons below and share it with the world. Remember, trading is more than bars on a chart. So until next time, stay focused, follow your plan, and trade without fear. Have a great day.